There's no stopping slide in the Indian rupee. Almost every other day we hear or read that the rupee has hit fresh lifetime low against the dollar. Welcome to ET Explains, and we'll tell you why the rupee is in deep pain, how the fall will impact Indian economy, and should a common man like you and me really panic? On Tuesday, the rupee closed an all-time low of 72.70 against the US dollar. This year alone, our currency has fallen by a whopping 12% against the US dollar, making it one of the worst performing Asian currencies.
If you look at the domestic economic situation and the global situation, there are virtually no domestic reasons which are attributable to this. We must bear in mind that in the last few months, dollar has strengthened against almost every currency.
Let me give you two examples to put things in perspective. Turkish lira has fallen by a massive 40%, while Argentina's peso has fallen 50%. Still, for a stable economy like India, a fall of 12% in its currency is really big. Now let me explain what's behind the rupee's fall. First is the rising crude oil prices. India imports nearly 80% of its oil needs. Now the price of the crude oil is decided in US dollar.
We are net buyers of oil, and therefore, if by creating shortages, oil price is temporarily raised, that adversely impacts us.
If oil prices rises, India will have to sell more rupees to buy US dollar, which in turn will be used to buy crude oil. So it's simple. If the crude oil prices rise, rupee will go down. Now a higher import bill for crude oil prices will impact India's current account deficit, which in turn does not augur well for the rupee. Next culprit is the US dollar. The US economy has been steadily growing this year, which means global investors have been taking out money from emerging markets and pouring it back into the US economy. In India as well, investors have taken out money from equity and debt markets, which has resulted into the fall in rupee. Last is global trade war concerns. US President Donald Trump has been at loggerheads with countries like China and Turkey. Now, I told you earlier that the Turkey's lira has fallen 40% this year alone. Now, this is weighing heavily on emerging market currencies, including India's. Now, let's move on to how rupee will impact Indian economy. First, a weak rupee means India will spend more to import crude oil. Now, if the crude oil bill rises, this means that prices of petrol and diesel will rise in India, which in turn will impact inflation. Who will be impacted by rising inflation? The common man and the man on the street. Secondly, a fall in the rupee will hit profits of the companies which are heavily dependent on imports. Rising imports costs means lower margins for the companies. A falling rupee has also affected Indian domestic stocks. For the last couple of days, whenever a rupee has fallen, Indian stocks have taken a plunge. But should we really panic?
Eventually, the inherent strength of the Indian economy has to play a very important role, and these fluctuations will calm down.
First of all, let's understand this. Rupee is not alone. All the emerging markets are falling. Neither the government or the Reserve Bank of India is panicking as of now. Finance Minister Arun Jaitley recently said that there was no need to panic or have a knee-jerk reactions. Also, given the fact that how the RBI is responding to the fall in rupee, experts say they are so far comfortable with the fall. One school of thought is to let rupee run its course. Well, this is because India imports more than it exports. Meaning, India is running a huge trade deficit, which was 16 billion as of June 2018. Many economists have said that the rupee should be allowed to weaken to boost or revitalize our exports. Experts feel this might be a good time to set things straight on exports front. Now to recap, rupee has taken a huge plunge. And this is not because of the domestic factors, but the global factors like crude oil, US dollar, trade war concerns. Second, experts feel this rupee fall might result in short-term pain for the economy, but long-term gains will outdo them. And lastly, there's no need to panic. The government or the RBI are not.